Hello and welcome to Profiles in Risk. This is your very messy-haired host, Tony Cañas. And I'm getting a haircut on Saturday. It's driving me crazy. I mean, I'm keeping it long, but like this stuff is driving me crazy. And today I have with me Brian Thompson, Business Development Manager for North America at Descartes Underwriting. Brian, thank you for coming on the show today. How's it going?
Good. No, Tony, thanks for having me. I'm glad to be here.
Awesome, awesome. And it looks like on LinkedIn that you are in the. I'm trying to find a good euphemism for Little Rock. One of the few states I've never been to. I'm sure it's beautiful,
Oh,
but not
it's
exactly an insurance hub.
no, there's not a large carrier presence or any placement hub or anything like that. It's definitely an overlooked state. I'm from there. We've got obviously the Arkansas Razorback and the state logo right behind me there. But born and raised, I've escaped a few times, but I keep coming back home. So, yep.
Okay, gotcha. Um, okay, and we're recording in September 6th, 2023. We went through the hottest July on record, and August was a little better. But I'm assuming that now, like it's kind of beautiful. You were at like 115 degrees back in July. I'm assuming now it's beautiful.
Ish. It's not 115 anymore. We had some heat indexes that definitely hit that, but I think today we're still under an excessive heat warning. Heat index pushing 100 degrees, but supposedly next week we've got the cold weather coming next week. I say cold, it's going to be like high 80s versus mid to upper 90s.
Okay, gotcha. So we always give the guest the chance to give the elevator pitch. What is Descartes Underwriting?
Yeah, so first off, thanks for saying it correctly. Most people call it Descartes. My usual joke there is I don't care what you call me as long as you call me. But Descartes Underwriting, it is a parametric MGA based out of Paris, France. Been around for about 5 years now. Actually had one of the largest Series B fundraisings last year of 120 million. Very well capitalized, very well known in the parametric space. Really been in the U.S. market about 2 years now, but we focus only on Nat Cat perils and only on parametric policies.
Okay, so 2 years in the U.S. market. Okay, and Descartes was a French philosopher, right?
Yes, you got it.
Uh,
Awesome.
so now that's about the extent of my knowledge. Like I couldn't tell you what came from Descartes, but I am really curious
Yeah.
how the name came to be.
So obviously, I mean, he's not only is he a French philosopher, but he's also a very well-known mathematician. So
Oh, okay,
I'm
okay.
gonna out myself a little bit. I'm not quite familiar with everything he did on the math side, but I believe like his kind of his famous thing is the I think therefore I am. That's actually Rene Descartes. So being a French company, French mathematician, very data science focused, they decided to go with that. But
Okay, so we think that we can insure it.
yeah, yeah. I
We,
I'm sure I've offended all of my French coworkers at this point by not knowing more about Rene Descartes, and I'm going to have to immediately go study this farther before I talk to any of
Okay,
them again. Yeah.
perfect. Okay, so parametric. We've had a few parametric companies come on the podcast, and here in the U.S. with a focus on cat. So
Yeah.
cat has been a gigantic thing the last few years. So you've been busy. Uh,
Yes, very much.
so you guys do cat for earthquakes, for tornadoes. What do you do? What do you do parametric cat for?
So really anything that's a natural peril, right? So either weather related, earthquake, wildfire. Kind of the thing on that is if you've got a weather or natural problem and we can get data on it, we can probably build something around it for you to solve your problem. The vast majority of it in the U.S. market is going to be hurricane. That's the main pain point in the property market in the cat space. Earthquake is definitely growing quite a bit as capacity seems to shrink there, especially on the West Coast. So we've seen quite a bit more earthquake. And then honestly, really in the severe convective over the last just 3 or 4 months, we've seen a lot of those renewals come through where last year maybe they had a 1 or 2% wind and hail deductible. Now they're going up to 5, even higher. And so we've really had a lot of opportunity to also kind of start sliding into the wind and hail more so than we traditionally have. Yep.
Okay. Okay, so when it comes to hurricane, um, I'm assuming the oracle is the National Weather Service.
Yeah. So there's a couple different ways people can approach it, right? We typically use the National Hurricane Center. I mean, the data is very robust. It's public. It's available. It's very accurate. It's reliable. And those are kind of the two things, right? Is it reliable? Is it accurate? Because you don't want to have a situation where you build an index, you build a structure, and then something happens to the data. Whatever source you're using drops out, or you can't vet it, and therefore you have some coverage issues. So, in order to avoid that, we actually do work with the National Hurricane Center as our data provider for hurricane. Yep.
Okay, so it sounds like as opposed to like an off-the-shelf program we have, and hey, if you have business like this, call us. It's more, hey, large brokers and wholesalers. If you have if you're having a lot of risk that you're having a hard time placing, that is similar, and we can build the program for you.
Yeah, so I kind of like to describe it to people. You know, I came from, I've been on biz dev for a while, but more so on the admitted side with some wholesale. But, you know, I had 70 boxes I could sell you, but your risk had to fit in one of the boxes. Here, what we're doing is we're basically building a box around your risk. So, you know, which is something I've absolutely love about this side of it is you get a chance to really kind of dive in and figure out what your problem is, what the pain point is with the account. Sometimes it's just, hey, no one wants this. I need capacity. Other times it's, you know, this particular property is just driving the whole program into the dirt. Can you help me with it? Or really excited. That's why it's a conversation. It's not, hey, here's our structure, here's our products, take it or leave it. It's, what are you trying to solve for? How can we help you do that? How can we approach it? And, you know, it's interesting. It's usually the fourth or fifth iteration is what actually binds, because we're really trying to narrow down to get the best structure for the budget, the concern, the premium, really all that all at once. So it's fun. It's a lot of problem solving.
Okay. So hey, Brian, I've got 300 properties around California that were dropped by State Farm when they pulled out, kind of thing, and we think we can get them some level of property coverage, but nobody will touch the wildfire.
Yep.
Can we put it all together into a parametric program?
Yeah, you absolutely could. I mean, I will say with Descartes, we are commercial only. We are.
Oh, okay.
I have some changes to that down the line, more like the high net worth space on wildfire, but that's not there yet. So let's maybe by the time this launches, we'll have it live. But for right now, we're going to operate on the assumption that it's commercial risk. And yeah, we can look at that either, you know, we can carve them out individually if we need to do that. We could put all 300 on one policy with their own limits, their own structures, kind of tied to where they are. Wildfire is kind of interesting because it's more of a binary. Most of our programs, we typically will have an index where you kind of step into the coverage, right? The more severe it is, the closer the event is, the more of the coverage limit gets deployed. Wildfire tends to be more binary. It's basically, did it burn or not? You know, that makes it a little easier to quantify. You know, so we'll usually have if we have the actual asset, we'll have a circle around it. And then looking at the satellite data, if any of that, you know, that circle around the structure burned, then coverage is afforded.
Okay. So can it be an indemnity product, or because most parametric is you know, here's your X amount regardless of the actual value of what was lost.
Yeah, so I'm glad you asked that. So it does. You do have to suffer a loss, because otherwise it's not insurance. So to make it insurance, you do have to suffer the loss. Now, we don't adjust it. It's trigger based. You know, so when the event happens, here's your pre-agreed payout based on the predefined triggers. But let's say it triggers $5 million, is how much the event happened, whatever event we're looking at, give you $5 million in coverage. Then you have, maybe you only had $3.5 million in losses. Then you would attest to say, I had $3.5 million in losses. That's what we would pay. Ideally, that's a little bit of a broad example, because we across the industry try very hard to eliminate any basis risk. I mean, there's basis risk in traditional indemnity policies as well, just like there is going to be in parametric. We try to eliminate that as much as possible, so that the payouts based on the severity and all that on the index really do correlate with the suffered loss. But where it's a little bit different on that is really any economic loss can go into there. So like non-damage BI is eligible. So there's a lot of different things that are eligible to accrue to that triggered amount that traditional insurance wouldn't offer. So let's say we're looking at, you're a hospitality risk in the Gulf and a hurricane's coming. Maybe it passes at 27 miles. You had coverage out to 30 miles. So you triggered coverage, but it's a smaller Cat 3. You didn't suffer any damage to your building, but you had increased peril the week before as you're trying to harden the structure and get it ready. You had lost revenue from people canceling before the event even got there. You had lost revenue from the weeks to months after during the recovery period. Now you're paying potentially overtime to kind of recoup your property, all of that. But let's say you didn't actually have any physical damages, so your traditional BI wouldn't trigger. We would. So all of that is eligible to be accumulated towards that limit. So typically by the time you add in all of the economic losses and the traditionally non-covered losses, you're going to be able to hit that limit, or to be able to just have enough losses for that limit. But that is kind of a common question. You do have to suffer a loss, because otherwise it's a derivative or a swap, and it's an investment game at that point.
Okay. How long does it take to build a program?
So to build a program, it really depends on the risk. I mean, if it's single location, relatively easy, we're just looking for hurricane risk or earthquake on this one location. It's well defined. We know what we're looking for. 3 or 4 days. We can do it quite a bit quicker. There is a lot of modeling and work that goes into these to eliminate that basis risk. We use the phrase like we're risk agnostic, whereas the occupancy type, construction type, all of that doesn't really matter in parametric, right? It doesn't matter in the rating. It matters in building the structure. So let's say you've got a 1973 frame HAB structure on a coastal island. That's fine for us because we're underwriting the probability of the peril occurring at that location. We're not looking at the risk type or anything along those lines. Where we do look at that is going to be informing that structure, right? So if I know it's frame, it's older, maybe it can't withstand a relatively strong hurricane, we're probably going to attach a little bit lower. But let's say it's a relatively new construction, it's very hardened, it was built to withstand a Cat 3. You don't need a whole lot of coverage at a Cat 3. So we will look at that as we're building the structure, and a lot of that goes into the modeling and the predictive analytics that go along with that. And so that's kind of where the potential of the delay is, because we're not just throwing out, hey, here's our one policy, take it or leave it. We are building these bespoke to each risk, and so there can be some time that goes into that. Obviously, if, last half of May, when we're a couple weeks away from hurricane season and everyone's scrambling to find something, it may take a little bit longer, but usually just a few days we can have some turned around. And then if it's 600 locations across the U.S., or if we're looking at some Caribbean islands, and we've also got some Pacific Northwest, you're throwing on 4 or 5 different perils on there, it can obviously take a little bit longer. But.
Okay. What are the commissions like? Is it similar to the admitted market?
Yeah, I mean, I'm going to speak for Descartes. Obviously, I think most of our competitors are about the same. We typically will quote net, and so we can gross it up to what you'd like. If we're working with wholesale, we're going to have a little bit higher just because they're having to split it. If we're working with retail, potentially with them, we also do quite a bit with public entity municipalities. A lot of those may just be on a fee basis versus a commission basis. So it varies. We can do whatever you need us to do. So, yep.
That's fantastic. Absolutely fantastic. Okay. Do I need to go through a wholesaler or?
No, you don't have to. You can come to me directly. Yeah, we work with both channels. We are dual distribution. We don't really have a preference either way. It kind of depends. It's interesting. Some of the risks tend to stay mostly in the retail channel, and then a lot of other risks tend to come through wholesale. I mean, I think by nature of, especially in Florida and the coastal area, kind of working there with the hurricane, a lot of those do seem to get pushed to the wholesale channel because that's already where the property placement's going to begin with. And so it makes more sense to come from that. If we're looking at, wildfire or just a little bit other, maybe some different, rainfall, drought, snowfall cover, things along those lines, those may actually be coming more through the retail channel. So we work with both. Usually it's more like national or larger regional retailers, and then wholesale, and then national wholesalers.
Okay. You have a really cool role with the insurance, so I'm sure that I'm going to get questions from the listeners on how do I get a role like that, right? So I'd love to hear kind of the story. I know that you've got a degree in RMI, you've got a CPCU and an ARE. How did you tie it all together to come to this really cool side of insurance where you get to build a box instead
Yeah.
of play with a predefined box?
No, it's a great question. I've had a very interesting insurance career. So I guess we'll start kind of the beginning, right? I like most people didn't intend initially to go into insurance. I actually had been working at Disney World for a couple years as a recreation manager. Loved that. 2008 economy kind of started, and the economic downturn started. Really kind of wanted to get out of hospitality and really start a career. I had 1 year left on my degree. Wound up moving back to Arkansas from Orlando with my wife, and the college I went to had a risk management program. The agents I knew growing up, I really liked that they were involved in the community. They just seemed to be kind of like very visible people doing things, and I really, that's something I kind of wanted to be career wise was, forward, outward focused, facing, talking to people, things like that. So why not get an RMI degree? During that process of kind of finishing up those classes, really kind of learned about reinsurance and the broader insurance industry as a whole. So right out of college, wound up opening up an agency. It was a captive agent with shelter insurance, so very similar to State Farm, just kind of a super regional in the Midwest. Great company, loved working for them. I was agent for 6 years. Really wanted to do something more than just be a captive personal lines agent long term. So had the opportunity with them to go into reinsurance. They also owned Shelter Re, doing reinsurance domestically, mostly for smaller, mutuals, 1 or 2 states, things like that, and then obviously quite a bit of European and Asian risk as well. So that kind of really introduced me, I think, to like big I insurance, right? Like the overarching industry on a global scale. Loved that. Was doing property cat. Really enjoyed it. Travel was a ton. I had 2 small kids. Missed my kids. Had the opportunity to go to Markel for 5.5 years, working as a field rep in Arkansas initially. Moved up to running their field team for the Mid-South region on the admitted side. Again, great opportunity. Really loved Markel. Missed working on like weird property. It's something I really enjoyed, the reinsurance and kind of doing, different stuff. I was on the admitted side, so it was very, I had a lot of options for it. Like I said, I had a lot of boxes, but you still had to fit the box. I had been aware of Descartes and parametric just for being kind of an insurance nerd and following all the news sources and Artemis and Insurance Journal and all these things. And when they got their Series B funding in 2022, that got my headlines, and I just had started following them on LinkedIn, and opportunity arose to apply for this position, and felt like it was a really good time to have an alternative in the property market. I kind of saw, I didn't think it was going to be quite this crazy, but knew it was definitely going to be hardening quite a bit in the future, and decided I wanted to take the leap, and it's worked out great. Absolutely love Descartes, love what I get to do every day. And I'm not just saying that because I'm doing an insurance podcast. Like, this is fun. It's, and it's a very small pond. There's not a whole lot of people doing it, so you get a lot of exposure and a lot of opportunity to talk to people that I probably never would have prior to that. So I guess how to get into it is just keep your eye on it. Follow the players that are doing it. It's going to be growing significantly as an industry. I mean, Descartes going to be growing. Follow us on LinkedIn. Follow me. If we have a job posting, I'll definitely be putting it out there as well. But I think it's just keep an eye on it. There's going to be a lot of opportunity in the next couple of years, I think.
How many of you in the U.S.?
So there are 8 now. We just had a couple new folks join us. So yeah, we've going from 2, I guess, 2 years ago. So it's definitely a lot of growth last year.
Fantastic. Thank you very much. It's super interesting. Parametric is interesting. Back when I got my CPCU, I don't think parametric was ever mentioned. I don't know if you got yours before or after me. I got mine in 2011, but literally the word parametric was never mentioned.
Yeah, it was a couple years after you. I think I was 17.
Okay,
it had kind of been. I don't think it was in the textbook, but it was starting to be talked about a little bit. I think prior to that, it existed since the 90s, right, with cat bonds. That was the kind of the initial start of it. And then, 2000s, I think there was a Caribbean island facility was one of the first ones that wasn't a cat bond that got put together. And then you kind of start seeing a little bit more. It moves down to being a little bit more approachable. But until the last maybe 5 to 7 years, I don't think it really was near as ubiquitous as it is now, and really approachable for just the normal retail agent or wholesaler or just smaller risk, right? It's still I think until the last few years with the Internet of Things growing up, machine learning, the access to data and satellite providers and things along those lines, where we can really get the granular information that we need to make it effective, that's kind of blown it up over the last couple of years.
Is there any education out there for parametric, or you really have to kind of learn it on the job?
Pretty much have to learn it on the job. What's interesting about it is at its core, it's real simple. We are underwriting the probability of that event happening at that location. If A happens, B gets paid out usually within a matter of weeks. Everyone moves away. So that part of it, the kind of the promise of it and how it operates is very simple. The rest of it is not. That's one thing I love about this job is most of our underwriting and kind of our folks back in Paris, they're data scientists, they're climate PhDs, they're brilliant individuals that necessarily didn't have an insurance background, but then we also have kind of the founders and the creators of Descartes. They've got the insurance background. We have a lot of insurance people as well. So we're bringing these two very distinctly different groups of people together. Where a lot of our underwriting is actually climate scientists, seismologists, things along those lines, that have then had to adapt that to insurance on a global scale. So now you're working with 40, 50 different countries and all their regulations and But
so basically, your role is get the word out locally in the U.S. And then when something comes in, kind of package it up so that the big guns back in Paris can decide how to price it.
Yeah, it's a little bit different than traditional just biz dev in the field. It's almost field underwriting, but with no authority. And I guess because in that case, because it is different, we don't need authority for what we do. But like I said, the broker will come to us. Hey, here's the risk. Here's what we're trying to solve for. Usually we'll have kind of that intro, that first couple conversations to kind of figure out exactly what it's looking like, put together some sort of idea of our structure and program, send that into Paris, let them look at it, let them model it, let the brains kind of work through it. A lot of times they'll have some tweaks and changes like, hey, if we look at it this way, we can actually make it even more effective, or because of this risk, this is how we need to approach it over here. And so, they'll obviously have a much better understanding of kind of what's really driving some of the pricing than I may once they get into the analytics and the data of it. And so they'll have kind of come back with the pricing as well as maybe some structure ideas, some follow-up questions, and then it just starts the conversation, right? Now we've got 3 or 4 iterations. Everyone feels good about it. We'll present to the insured. A lot of times we actually get brought in to help the broker present to the insured. It really depends on the broker's understanding, their comfort level with parametric. If it's 3rd or 4th time we've worked together, I think most of the questions they feel pretty good about. But if it's the first time they're presenting, or they're working like board of directors for a condo association or for a municipality or things along those lines, maybe they just want to make sure that they have a fail-safe if the questions get a little too deep. So it is interesting in this role that we actually do work quite a bit with the insureds as well, more so than I have traditionally.
All right. Super interesting stuff. Thank you for taking the time to enlighten us about it.
Yeah.
And look forward to see you out on the road. I'm
going to get you to Arkansas. I'm going to get you at some of our conventions, or you just come down. We'll go mountain biking.
Yes, that's right. I have never been to Arkansas, so I would love to speak at a PIA of Arkansas or something along the lines.
We will absolutely fix that. So we've got both. We have the Big I and the PIA in Arkansas. Great friends with both of them, both wonderful organizations. We will rectify this. I'll get you here.
They both have the how to engage millennials problem, both the PIA and the Big I. So I'd love to help with that. Awesome. Thank you so much for your time today.
Yeah, thanks again, Tony. Appreciate it, buddy.
And I hit stop.